What's up, guys? Welcome back to another YouTube video. Today's going to be a very important one. It's going to be less about the charts. It's going to be more about how I journal. So if you've seen any of my YouTube videos, even the backtesting ones or even in my free Discord community, you've seen how I journal, then this is going to be the video for you because this is going to help you. Journaling is the main thing that I want you to take away from this video. You need to be consistent with it because then you can start to notice signatures in price. So without further ado, let's get into the video. Right, so this is my trading journal, right? It's very simple. You don't need to stress yourself out about it. So, if you've been following either the way I trade or all my trade breakdowns or even the back testing, right? Every single trade will look identical. Okay, it will just be a different day, different market, etc., or different buyers. Okay, so let's go to the table here, and this is what you can see. This is every single trade I've ever taken. Okay. So it goes on for ages and ages and ages, right? We'll take a deeper dive into this and how I do it and the type of stuff I do journal, right? Because journaling is very important. So let's get into it. So I'm gonna go for a random one. I think that's my best bet here. My plan is to look at anything, right? So as you can see, what I do is and what I journal is very important. So I journal everything ranging from the market, the outcome, all the time frames. Obviously, I only started doing that back then. I only started doing that. What day is that? In 2025 May. So I journal all of that, right? So from here, what do? This is one of my journals, by the way. I've got loads of ones, but this is just the cleanest one that looks like this, and it's the most easiest to read and present to all of you. So as we all know, the way I trade is fractal. It works on anything, it works on any time frame, it works on Bitcoin, blah 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 blah. As you can see, there's some Bitcoin trades in here. So let's get into this. So I don't know, I'll start here right on ES. This is we'll go ES. Actually no, we'll go NQ. So this is my birthday. Okay, so this is my birthday here, July the 17th. So we're going to do this one just because of the fun of it, right? So this is everything your journal needs to have in it, okay? It needs to have the market, it needs to have the date, it needs to have the day of the week, it needs to have every single time frame, okay? If you use more than 3 time frame alignments, then we're here and we can have a look at the trade ourselves. So this was a internal, right, to external play by the looks of it. So this should have actually been rated an A+. Because this was internal when we've got Nasdaq created the lower low, while I assume, what does it say, YM created the lower high, right? So this is our internal range liquidity pool, right? And then we'll go to the high time frame, and this is the high time frame is then the most important part for me because I really like to see how mechanical I can get my buyers. Okay, so what do we see here? We have SMT down here with either ES or YM, right? It's failing to sweep this external range liquidity pool, showing me Nasdaq is the stronger one. But then as we go down to the 1 hour, for example, you can see Nasdaq actually becomes the weaker one. Okay, this isn't going to be a trade analysis. This is just showing you how I journal it and everything that I'm looking for. Okay, so you can even start to do here where it says potential R. So if we go back like this, you'll start to see I started writing here and what my potential RR could have been and news and everything like that. So if we just go down and pick another run at random, we will go here. This will do, actually we'll do a loss, and then you can see because losses are completely normal. We'll do here, right? So we'll do a loss and we can go over this as well. So this is on Friday the 6th, 2026, right? Or February the 6th. Okay, so what's happened here, right? We've obviously got this SMT inside of an internal range liquidity pool. Okay, we've obviously got our inverse fair value gap there. I was hoping, I kind of remember this to be fair, when we obviously had this order block here, which was there, but obviously I can't show you that, and that already got a retest. So let's have a look. So I took this at 10.35, and my other comments were, this is if you make a mistake, you can put stop loss was too tight. Only like risk and evals, right? Perfect trade management. I've got no problem with that. So let's have a look. Let's go from the top-down analysis. So it looks like I was trying to trade back in into the range. We've had 3 days of expansion. So I was looking for a new phase of price, and I was looking for a reversal, right? Targeting previous day high, SMT to lows. Pretty simple. Oh. So this is, I assume I wouldn't have had a Discord community here. And then here you have our tag of SMT. Then here you have our internal range liquidity pool with SMT, right? You have this previous day high, which is also relative equal highs as a draw. So I was just looking for internal, right? And you can see we already sweep out this external, but I still wanted higher. So why do I keep doing that, man? So from there, you can see that if you actually did get in on the order block, you probably would have been at 2R already at its buy side. So I just chose to get in late, which is obviously, you know, when you're using 3 different entry functions, there's pros and cons to each. The inverse fair value gap normally creates itself the first time. In this scenario, it didn't. And then the order block normally comes after that, but in this scenario, the order block came first. So this is just a simple way of how to journal. And you can see, you can also do it like this, where you can have it in the calendar view. So you can see every single trade you've ever taken. Then, like, let's go and look at this one. YM should have been a W, okay? So what happened here? This is quite recently, all right? So let's go and see from a hard time frame point of view. What did we do? We had external to external by the looks of it, SMT at the lows, all right? How do I get out of this? Out of there. Right? Oh, where's that gone? And then you can see from there, we had a bullish bias. Then we had internal to external, right? By looks of it, of a 1 hour PSP. So we'll go from here. And then lower time frame. Let's have a look at the lower time frame. So what do you see on the lower time frame? I see that price should have been a stop loss by the looks of my annotations. We had a break block inspection, we had the inverse fair value gap inspection, and the order block inspection. So in hindsight, my stop loss was too tight. My stop loss should have actually been obviously where it says it is, right? And then it would have gone to 2R. So I got stopped out, which is one of those things where it's my fault, it's no one else's fault. But it's very important to journal trades like this, because then now going into the next day and the next couple of weeks, and obviously in the present day now when I'm recording this, I know exactly where to put my stop loss, because if I've got a large sample size of where this keeps happening, I know what I'm doing wrong. I have physical evidence of what I'm doing wrong. Okay, so I mean that's just the bare minimum that you should be doing. You need to journal your trades. You need to be picking up on these certain signatures and price. Okay, because if you don't do that, then how are you going to help yourself? How are you going to expect yourself to grow as a trader if you can't follow these simple rules? I saw myself grow, right, the most when I was backtesting and I was showing up to the charts, either paper trading or demo trading or on an eval or whatever, and then I was journaling everything. That way I've had so much experience and I could just see how the strategy would work. Obviously, no strategy works 100%. You will take losses, okay? But you just have to manage your risk. You have to make sure you have a proven edge, and then you just have to keep showing up. All right? It's really that simple. But anyway, guys, this is a bit of a different video, and I hope you enjoyed this. Feel free to like, comment, and subscribe. And comment what videos you want to see next. Do you want to see a video next on my risk management? Do you want to see a video next on how I manage my trades? Just let me know, and I'll try and get them done for you.